If this were to fail and then continue to fail, however, that could be very bearish. And so we'll see how that goes. Obviously, the downside is not well defended here, and not gaining further upside today puts bulls on the back foot going into tomorrow. Commodities pretty flat today. Dollar moved up substantially, back at 105.37 from yesterday's lows in the 104 range. Yields, however, are still continuing down. Not a big turnaround there. Intraday, we got a little bit of a turnaround on them, but not that much. Correlation on the 1 month did start to pick up and turn back around. Correlation on the 3 month starting to flatten out. We may be kind of hitting a breaking point for how fast they've moved into the dispersion trade, and I don't think that trade's really working out for them everywhere. And so we are seeing a little stair step in correlation. This isn't a confirmed bottom or anything. It's definitely not a reversal, but it is a sign that it's getting a little more difficult to keep shorting vol. The carry trade got levered up a little bit today towards the end of the day after bleeding out for most of the middle of the day. So about even over the last 3 days now. Forward yield on volatility, negative 6.43. And the yield curve's been kind of climbing up, flattened out over the last 3 days as well. So most of the loss in yields, most of the continued inversion happened between like last Wednesday and Friday. Not a lot since then. However, vol has gotten shorted very hard since then. It did rebound back a little bit this morning, but that got crushed. I don't think move is updated yet. Skew definitely hasn't. But what is something that is interesting is on this run up, institutions are still holding on to that tail risk hedge and even increasing it yesterday. This is kind of interesting, right? Generally speaking, when we start to move up like this, we see institutions dump their tail risk hedge right away, right? And we're not seeing that this time. So some of them are still holding on to those out of the money long puts, and they're hedging this upside move pretty heavily. 20-day moving average as of yesterday, 62.02. I don't know why I keep this up. And fixed correlation actually kind of stabilized. Earlier today it was at like negative 40, but now back to negative 37.64. So a little bit of improvement between VIX futures and cash VIX as far as their correlation is concerned. As they become more correlated, demand for volatility picks up, right? There's an arbitrage opportunity between cash VIX and VIX futures. So as that demand picks up and they become more correlated, IV will rise, right? Theoretically. 30.34 rate cuts today. So the sum total of Crashkari's damage was removing 0.01 rate cuts from the Fed Fund futures pricing. Out here on the weekly, still very bullish. On the daily, not only have we held the MA50, but we have tested the upside resistance above that. A reversal here is possible and a retest of the trend before moving higher. I would say almost expected. So tomorrow might be kind of a bearish day, or at least a little bit of a pullback before we continue higher. And that's about it. So thank you guys so much for tuning in. Sorry I'm so nasally. My nose is all messed up from my allergies. But I will have Pickles Picks out tonight, hopefully a little earlier, and hopefully with data. And I will see you all bright and early tomorrow. Thank you so much. Have a good night, everybody.